Hello, everyone. This is Giulio Coraggio, technology partner at the law firm DLA Piper. This is the podcast Diritto al Digitale. I'm delighted to be here with Spiros Margaris, a venture capitalist, futurist, keynote speaker, senior advisor, and one of the most famous influencers worldwide in fintech, AI, and blockchain. Hello, Spiros, and thank you very much for accepting our invite.
Thank you for having me, Giulio. It's a great honor, and yes, let's shoot.
Absolutely. So, Spiros, usually we start our podcast with a short introduction on the career of our guests. As I mentioned before, you are globally recognized as an influencer in so many different fields, but I'm curious to see what was the turning point of your career, where everything started. From what I understand, you are Greek by origin, but then you are now based in Switzerland. I don't know. Can you tell us a bit about you?
Of course. I was born and raised in Switzerland. My parents are Greek immigrants who came in the 60s, and I was born here and lived for a long time in America. And most of my career was in asset management, hedge fund business. And I moved, and I had my startups during the .com era with big billboards in New York, and also my failures. And all of this, made me who I am. My startup experiences, my hedge fund experience, and when I left as a partner, the hedge fund advisory firm in 2010, I was looking to see what to do in the future. So I started to write about innovation, what I thought would be innovative, but not about others' innovation, but about things like the Fintech supermarket. I coined it, or tankers or speedboats of Fintech, how you describe the Fintech world. I coined it, things like this. And I wrote some articles which people can find on my website. Mm-hmm. And then I had the opportunity to raise funds for a Fintech startup. And that's how I moved in. And then this Twitter became more and more important, and LinkedIn, but Twitter mostly. How to influence, basic influence. I share what I read, and it's kind of my research and staying in touch with the industry. And I have a lot of engagements, over 50 million per year, and I'm involved in 2 unicorns as well. BFox is the biggest insurtech company in Europe. And I'm also involved in STCP as a board member. That's a payment company in Saudi Arabia. Also a unicorn, for people to know, companies are valued over $1 billion. But I'm globally many companies involved in, at Spark Labs, Ventures in California, and in Canopy, that's in the rental space, in UK, Media Stock and the cybersecurity. Two is a securitization company in Switzerland, which does a fantastic job in innovating securitization. And I think that's about it. I mean, I think I was the right place at the right time, and put in the hard work, and I was lucky. It's hard work and luck, and experience, whatever it is. It's like Steve Jobs said, connecting the dots. You don't know before where you're heading, but eventually all the things you've done, not even business-wise, I don't even think even business-wise, just in general, eventually, if you have some luck, and you can connect those dots and make something out of it.
Yeah, I think you mentioned something that really that is really interesting on the importance of failures. Do you have any sort of thought about that? I mean, experimenting new tasks, new ways of doing business, new types of career paths is part of the experiment of the adventure of any startupper.
Yes.
Can you tell us a bit how failures were so important in your career, and do you think they are still important because without failures you cannot do the right thing, maybe?
Yeah, I know, but it's so true. Without failures, I mean, you don't advance because as we know, you don't learn from success. I mean, if you're successful, you think, oh, I'm doing everything right. But maybe there are a lot of other elements that make you successful as a startup, as a company. But I catch myself too that, I mean, I know looking back that the failures, that kind of experience of how to negotiate contracts, what to look for. Look for cash flow, and then a lot of things. To look for the right people in a team, the motivation behind the people in the team, etc. Things you don't know when you're young, and but you know other things. You know, you're much more courageous. And I catch myself sometimes also trying to avoid failures, which is a good thing.
Absolutely.
But if you don't fail, sometimes it means you don't try hard enough. It's like if I reflect every month on my development, my business, etc., and sometimes there's some failures in there. And if I didn't have those, maybe I should take a hard review on my progress and say, oh, maybe I'm not doing enough. And that's also I preach to companies. I mean, you have to fail always a little bit, but obviously not in a way that kills you, you know, or brings you down. But it's hard. There's more at stake when you grow. It's hard to think like that. So, but if you can preserve this thinking of having the courage to fail, then I think that's a path to success.
Absolutely. So you feel in your position that you cannot stand still, because then competitors are gonna catch you. So it's a continuous chasing for the next big thing in order to move forward, but also to keep your status. Is that right?
Yes, I mean, but I think I expect this from the startups I'm involved in, from the participants, and I do the same. As it's something personal. You know, I would like to get involved in a third unicorn, for instance, but some luck. But other than that, I want. You know, I'm very hungry. I'm still very hungry, and I still have a lot to achieve for myself. You know, and I work 7 days a week. People know but it's not something I recommend to someone. It's something they have to decide for themselves. But I think if you want to be successful, you have to work harder than the rest, at least as hard as some of the rest.
No, absolutely. You cannot teach the startup approach or the willingness to do so always something wrong. It's something that you need to have within yourself, and maybe you can become a good example for others, and others can decide to follow your approach. But I don't think that you can tell them to be more experimental, because if they don't feel to do that, then it's just a waste of time.
Yes, either it's in them or not, but it doesn't mean they still have to stay focused, you know. Within the focused field, they have to experiment, you know.
Yeah, absolutely. Listen, you've been looking at the stages of digital transformation of the last years from a very privileged position. What technology or technologies have been, in your view, more relevant and disruptive in the process of digital transformation during the past years? If you need to pick a few of them.
I mean, over the past few years, of course, and coming years, I think AI, big data, I mean, especially AI, we know will be very disruptive, and still even more so in the workforce and also in the competition, you know. But fintech itself is also very disruptive, not primarily only as the fintech startups, but also when we look at embedded finance, basically companies that are not primarily in the fintech space, but obviously they use fintech services for their customers. Like look at Walmart that tries now to build its own fintech services, or Tesla with providing insurances to the drivers, to the buyers of their cars, InsurTech in that case. I think it's this. We will see a lot of. I think industries. How we see certain industries will not be as clear anymore. It's not like you look at Walmart; it's the biggest retailer. Maybe Walmart or Amazon will also be, or part of it, the biggest fintech. I'm not saying that's going to be happening, but I think it's not anymore clear what companies are. Maybe somebody else said, the famous, I forgot his name, said everyone will be a fintech company. You know, every company will be a fintech company. I think most of them will, because they can do it themselves. You know, and control more of the data, control more of the experience.
No, absolutely. I was reading the other day on LinkedIn that Google appointed an head of insurance because they plan to enter into the insurtech market. So, as you mentioned, markets are becoming more liquid in the sense that the edges between my market and your market are falling apart, and your competitor of tomorrow might be in a totally different field from from where it is now. Is that right?
You know, think about it. It always happened, but not maybe in as much as we see now in that space. As you mentioned nicely, Google or Tesla, we mentioned, etc., Walmart. It's like we used to, an electronics store maybe sold T-shirts, gave T-shirts away, you know, in order to attract the young buyers. Now we might give away, I wrote about this, I also wrote once about this when we were gods, basically saying that maybe some of those providers will provide those services for free, insurances or whatever. It's never free, as we know, but because they will make money in a different way. But this kind of free approach of certain services will hurt the services that live from those fees. For instance, insurances. And I think the competition out there, like we talked, embedded finance, is much bigger and much more open to change and to add whatever works, whatever attracts customers, than the industries like the insurance industry, which still tries to compete at best with insurtech companies, but not beyond, because it's inconceivable for them. And to think of something, honestly, to be fair, what else to sell? I mean, I go to a big insurance company, if they provide me with some milk, I don't know. But if I go to the supermarket and they provide me with some insurance, that might work.
Absolutely. No, sure. You raised very interesting points. But do you think that something needs to change on the regulatory landscape in order to make the advancement in technological disruption more faster and more effective? I mean, you are a fintech expert, and we had in Europe the Payment Services Directive 2 that is expected to boost substantially fintech. If we think about AI, maybe the GDPR in Europe is something that might limit the growth of
Very good
AI
point.
or IT.
Look at for our audience, most people know, I mean, the UK was very advanced in opening up regulation for financial services, so fintech companies. That's why UK became this important fintech hub. It is. Maybe it's not the anymore, but it's one of the top. Some argue it is, but I would say some others are there as well. But it was because of opening up regulation to allow innovation and competition. Now, when we look at Europe, if we look at China, for instance, we see some other development where, if we look at Alibaba, Tencent, Alibaba primarily, but others will follow, that it was okay to let those dogs run. I mean, it's not in dogs. I should correct that words. Those fast entrepreneurs run and innovate. But now governments in China, for instance, became smart enough to do it themselves, and they want control again. And they can't do it there. So basically, a country that benefited extremely from innovation, from having this open regulation, kind of, basically now is protecting its own turfs. So that's a negative. But I think I would like to come to the next thing. You mentioned GDPR, AI, big data, privacy in Europe. I think the more we regulate it, the less competitive we will be. Mm-hmm. And less innovation, less competition, bad for Europe. On the other hand, I also have to say we have to protect consumers, because if we let things go too wild and consumers get hurt, some indirect way, that will also hurt regulation and innovation, because then people curb again. Wirecard is a good example. Should we regulate more because of Wirecard? I don't think so. I mean, there were basic mistakes made, and we should have, the auditors should have checked them better, but we will find out even more in the coming years. But those things will happen. It's like racing, car races. Sometimes cars have an accident. Doesn't mean we should be against racing. And of course, environmental people will be against racing. But I mean, just as a metaphor, or even better metaphor, which I always mention, is kids. People who have kids. Do they tell the kids don't run? Because they can fall. It's natural. They will fall. They will hurt their knees. But that's a process of growing up. And so we should tend more to openness. I would say on a scale to 1 to 10, we should be at 7 to 8 to openness, instead of regulating the industries, because we will fall back not only as Europe, but also compared to other countries, which have maybe different measures how they regulate big data, AI. I mean, China is extremely advanced because they have a lot of data. People are okay to giving away their data, and that's a huge advantage. And we should be scared somehow as Europe if we don't consider opening up regulation to allow more usage of data, more usage of AI, because it's very hard to catch up afterwards.
Well, if I understand you well, basically you think that the market is going to set the rules. I mean, if I look at the race of ESG, for instance, and the importance of ethical principles in the decisions of customers, of their suppliers, I feel that regardless of regulatory restrictions, customers are still making a decision that is not just price-based, but they consider that the companies that they pick needs to embed their values, and so
Absolutely.
go beyond what is set in the rules.
I'm involved with a company as advisor, IPR, which basically evaluates patents of companies globally for big players, but also for ESG. We have a portfolio of ESG companies with their patents. And I think that's an important part. I think the environment, as we know, climate change, etc., We see it, and people are very keen to buy products or get involved with companies that basically have the same environmental mindset, as you mentioned before. So that also will play a role, obviously. I mean, we simplify now before with our conversation what are the trends, etc. But at the end of the day, it's like cooking. I always mention this again. That's one of my things. It's like we all have the same ingredients, like Italian restaurant. We go to the kitchen and we have all the ingredients. Or maybe, let's say we have two restaurants next to each other. Same ingredients and a competition. Who cooks better? Depends on the cook, on the environment, on the restaurant, on the mindset and the culture. Which one will be successful? Same thing, the ingredients are like technologies, AI, big data, Internet of Things. And it's a question how you mix it as a company. And also, as you said, ESG, environmental consciousness of your company, ethics is a big thing. All these things is like ingredients. And it's up to you as a company, as a leadership, to decide how much weight you put to each technology and to ethics and other factors that will make you a success or not.
Absolutely. Look, we are in a very difficult time due to the financial downturn that was caused by the COVID-19 pandemic. So the big question for businesses at the moment is whether they need to be still and wait in order to avoid that they lose market share and without doing any sort of investment because the resources are really scarce at the moment, or invest in technologies because the market after the COVID-19 might be totally different than before. So if they don't invest at the moment, they might be out of the market. What is your view in this particular situation?
Some investment of big companies we've seen because of remote work. So basically, they had to build up their cloud offerings in order so people can work from home. Video calls was more important. Certain things they had to scale up, but I think they had to. But it's not a strategic move. It was like a reaction to a situation. But it's not the way. It's not a strategy. This is just more a reaction to survive.
Yeah.
People to work from home, etc., and keep the business up. I believe companies have to cannibalize their own business. What I mean is, if you don't cannibalize it, somebody else will. And if you cannibalize it well enough, that means you sacrifice some things of your business, pricing, etc., and adding also more cost because you invest heavily in technology, in whatever technology is important for your business, you will lose. Because the faster you cannibalize your own business, the less competition you will have, because there will be not enough food for your competitors to survive. And then you can build your business again. It's not pretty talk now, but the people believe like, okay, let's stay around. It's like you allow your competitors to grow and eventually you can't compete against them, because a smaller player always has only one way to grow forward. Smaller players don't have the privilege to stay put, but that's a nice thing, because therefore they grow, they become more competitive, and they do offer services which make old competitors look very old to the customers. Maybe not to the older generation, but to the younger generation, the future. And basically, when we look at stock markets, we talk about stories, we talk about the future. And I strongly believe even big incumbents, banks, insurances, of course, they're still safe. And of course, that management couldn't care less because in 5 years, they're gone anyway. But if they're smart, they would invest as much as they can in the future. And people would forgive them for not earning, but at least they grow. At least they do initiatives. Initially, it will be hard, But I think look at Amazon. How many years? I mean, this is a very unusual case. Obviously, they didn't make any money because they reinvested it, and now it's a different animal.
No, absolutely. I was reading the other day an article arguing that companies with scarce resources make wiser decisions, while usually startups, venture capitals, when they have a lot of money on their back, usually end up wasting that money because they are not carefully now they spend that money because they know they have a sort of a second shot. While if you are a very limited bucket of money, you need to be extra careful on how you spend that money and you make the best decisions. Would you agree with that?
Oh, yes. I think I agree 100% with that. I think I've seen it as well, not everywhere, obviously, but I've seen it often. It's like a lottery. It's like people winning the lottery. At the end, they're poorer than they were before. They lose everything. And the same thing for the startups. If you don't have management that has experience with dealing with such inflows, if you just have the guy who first time he gets from 1 to million funding, which is also substantial funding, 100 million, 200 million, I see often they spend it all because all of a sudden say, oh my, I'm so great. I have so many fantastic ideas, I'm God. Let's spend it different ways where you should think, oh my God, I was very lucky in the first place. And let's focus on what, I always tell people when startups founders or CEOs, I say, enhance what people want. I mean, basically your customers tell you already what they want. So try to make something better there and add a little bit incremental. So, and you should always think like a small startup, even if you have a lot of money, but it's very hard. I think if you're not experienced, it's like a lottery winner who got the money and then you buy 10 cars, a house, leave your family. At the end, it's only your divorced wife who is better off.
No, absolutely. Listen, you are a venture capitalist and have been mentoring a number of businesses you mentioned before during this discussion. On which technology would you bet for the next 3 to 5 years? You mentioned AI before, you mentioned fintech. You need to pick one for your next business.
I would say AI. Obviously, because maybe sometimes overhyped. Obviously, a lot of companies don't really use it as much as they say they do. But I think in order to compete, to deal with the data, to become more efficient, is AI, big data. We talk AI, machine learning, deep learning. It will flow into every business that wants to be successful. But it's, as I said, it's just one important ingredient, and at the end, it's also people. It's strategy. It's those are tools, but it's strategy. It's environment. I mean, who saw COVID coming?
Absolutely.
And
no.
But AI will play. I mean, obviously, you see it everywhere. But I don't see it in a lot of places implemented really. But I think people know they have to scale up their capabilities in that space.
Sure. But do you think also that there's going to be a change in what AI is? Because AI has been a buzzword for quite a while during the last years. But AI has been changing, has been improving. And as you said, now AI is everywhere in any sort of business. Do you think there's going to be an additional big step in how AI can support businesses that will make it more crucial for any business in the next few years?
I think the computing power we have at hand, the advancement, the different small use cases we see. Yeah, I think, look at, for instance, in China when a shop gets a loan approval before he even knows he needs a loan. So basically, we need the data. It's not the person who looks for the guy. Data will analyze data. We will have data, how much he spends, how much he is on time, what kind of revenues he has in his restaurant, for instance. And we all of a sudden, through data and AI, we realize, this is already happening. The guy might be a little short this month. Let's help him. And we make a little more money out of it. It's like we're still early in that space, and I think it's at the end it's like electricity. Now for coming years, it will be a competitive edge. But at the end of the day, one day it's just electricity. It's like 100 years ago. If you had a factory, electricity was a competitive edge, machinery. But afterwards, we take it for granted. But we're not there yet. And look at what Samsung did with this AI. With those avatars that look so real, and they're getting better and better. So basically, it's so many use cases where we're going to see AI, robotics play a role, and people won't mind unless they lose their jobs. I think that's a different story. That's a whole different discussion in itself. But yes, I think AI, if I would bet on something, is AI, but we're still early and it's a little overhyped, obviously. But overhype is okay because it means, hey, you guys pay attention to this thing. And then all of a sudden we find great things. Look at crypto. Crypto is a nice thing. We should, before we finish, some things seem like crazy. Like the art world where there was an NFT token painting was sold for over 60 million Christies. I think it's crazy, but then again, I might be wrong. Obviously, I could be wrong, but it draws a lot of attention. And crypto will, even Bitcoin. I'm not a Bitcoin holder. It never was, but I believed in it. It left me stay independent in my thinking. I think, but the more institutional investors come in, the higher it will go up, and unless regulation comes in. It makes it harder for people to buy and sell. Look, they talked about now something very current in India, maybe to put a ban in for cryptocurrency. I don't know if that will happen, but make it more difficult. Bitcoin correct a little bit. I think central banks, as much as crypto increase in importance, it's harder to control. But I think central banks around the world are looking hard to find a way to come into the game again, because why should they leave that game to others? Central bank digital currency will play a more important role, and they will make it hard for others to do in the crypto world. That's my view.
So you see that banks are actually pushing for regulations to keep their status in the market, and I see that you really anti regulations. We will see how it works. I do believe that banks shouldn't fight innovation, but should find ways of reinventing themselves. And I think that in some ways, even very traditional banks are doing it in these last years. Listen, you've been really full of interesting thoughts during this chat. I thank you very much, Spiros, for your time, and we will catch up in the future, because I'm sure that you are an immense source of innovation and of thoughts for whoever is operating in such a continuously changing market.